From Daily Forex, this is Chris taking a look at the dollar against the Mexican peso. The US dollar has fallen pretty significantly during the early hours on Wednesday against the Mexican peso. This was mainly driven by more of a risk on type of move around the global markets. This was spurred by members of the Bank of Japan suggesting that perhaps interest rate hikes are not on the table going forward as long as markets remain volatile. And that gave traders the idea that the central banks are still going to ride to the rescue. So the question at this point in time remains as to whether or not we are going to continue to see more of a risk on attitude or if this is just a simple relief rally. Underneath, we have the 19 level. That is an area that's been important multiple times, and therefore I think any pullback will more likely than not see a lot of buyers jumping in. Whether or not that actually holds true remains to be seen, but clearly, in an environment where it looks like global trade and global economics are going to be souring, it's hard to come to a conclusion that emerging markets will fare well. After all, this is a scenario where the Mexican peso is highly influenced by the U.S. economy, and that, of course, is something that you will always have to take into account when watching this pair. The interest rate differential does favor Mexico, but then again, so does a lot of risk. If you are willing to take risk, then fine, you buy the peso, but in times of uncertainty, money goes flowing into the U.S. Treasury markets, and that, of course, drives up the greenback. At this point, I don't see anything changing on this chart, and it's likely that there will be buyers looking for value.